Hello and welcome, everybody. This is Chart Request Live. Today is Tuesday already. Kind of feels like a Monday for me. We do this show twice a week, every Tuesday and Thursday at 1 o'clock Eastern Time. I am joined, as always, by my esteemed co-host and friend, Patrick Dunawilla of the Chart Report.
Steve, how we doing? You're not sick of me yet.
Who said that?
What is this? Our third appearance together today?
Yeah, and it's only lunchtime.
Yeah, sure.
Crazy. No, I got tired of you on Twitter Spaces. That's why I dropped off.
Yeah, you just left.
Tuesdays are fun. Listen, I think when we did this on Thursday, you were rocking the charts, and I think you started with the Russell 2, right?
Probably, yeah. Sounds about right.
The Russell 2000. Well, let's talk about it. Why do I love this index so much? This index that tends to lag all the other major averages and has just been this hot shit mess for 2 years now. Why do I love this index so much? Why do we talk about it so much? This is the best representation of, at least of any of the major averages, of what most stocks in the United States are doing. Now, hold on. You might be thinking, that's bullshit. These are only small cap stocks. It's not well represented in terms of the broader market. Fine, I agree. The reason I'm saying it's the best representation of the broader market of any of the major averages is because it looks like things like the value line geometric, which is, if you go look at the constituency of something like the value line, I mean, this is literally like the entire US stock market plus some Canadian stuff equally weighted. That's the value line, right? This is the Russell. So while the Russell might not be built in a way that it represents the broader market, the chart ends up looking like what most stocks in the broader market look like. Another one, if it bothers you that there's no large caps in here, another one you could use is EQAL. Right? Just to show that it's not about small caps. It's about just how broad of an index it is. So this is the Russell 1000, all large caps.
Oh, that makes sense.
Equally weighted, right? And now look at how similar this looks to the value line and the Russell 2000. They look similar in a sense that they really haven't resolved higher from these bases, right? The primary trend is still sideways, is yet to reverse higher.
Right.
I think it's important to point this out because we're talking about how large caps are extended. There's profit taking and stuff like NVIDIA and the semiconductors today. Most of the stock market is yet to even complete a trend reversal.
Right. Yeah.
Right. So while
it's kind of in that transitioning phase, right? Like going from base to uptrend, downtrend, base. Yep. It's kind of in that, from base to uptrend phase.
A lot of times, people tend to think that there's two trends to the market, up or down. There's three, and there's also a transitional period between that up and down. Like you said, it's the basing. So it's up and then sideways and then down, or down and then sideways and up in the case of, what we're seeing here today. But the more important point is that we're right there. The primary trend is just on the cusp of reversing for most stocks or these broad representations of the US stock market. So Russell 2000, 200, it just it can't get it done. It will eventually get it done. And when it does, that means that the bull market is just beginning for the rest of the market.
Yeah, I mean, just starts and stops over and over again. But I really like where your head's at. I mean, it's so much of the arguments we have about breadth and all that come down to this. If we can get this thing going, then all that breadth concern, all that kind of dissipates.
100%. 100%. This 200 level, I think we're going to get it done here this week. I think confirmation, you want to see him take out the pivot highs from late last year, early this year, call it like 205. But if and when that happens, like you said, Pat, we're going to be talking about opportunities in areas that we haven't really talked about much during this cycle. Yeah. We're talking about biotechs, banks, small cap industrials, materials. That should all be happening at the same time. So I'm excited for it. What do we got in the requests?
All right, let's kick it off with the mailbag here. Why don't we start with wavies? So,
Maybe.
Wavy, how you doing? UGP, long to all-time highs. UGP.
All right, before I pull it up, is this going to be a monster base, Pat? What do you think?
I think so. I think so.
Is this
Judging
going to
by
be
wavies.
is this is this going to be a wavy base? We got to give you your own
Zoom
chart,
out,
Pat.
zoom out.
Dude. Sick. All
There you
right, look
go.
at this. All right, let's flip it to a weekly. Wavy is usually bringing us like these really nice structural patterns, right?
Yeah.
I love that. Pat, one of my favorite patterns are these dot-com bubble structural bases, or in the case of financials, home builders, some other areas, you have these financial crisis bases, right? That are
Yeah.
still from just resolving. Go look at
Yeah,
a chart.
like you said, a lot of financials, things like that. Yeah.
So when these patterns, like these big structural reversals take place, they are so powerful, but it's only for the patient, right? They could be slow to start, choppy. These kinds of patterns are for people or investors with much longer time frames. And if you have the luxury of being able to zoom out and take a long time frame, they are very high probability investments or trades, right? They're really investments. Yeah. We're talking about years here, right? In other words, you get in when the reversal takes place, and then you let it take its time. You look back in a year, 2 years, 3 years, and see how far you've gone. We've watched pattern after pattern after pattern play out with these. Some of these semiconductor .com bases are just so cool. So
when you say the .com bases, like what is like SMCI one of those? Like, is that what you mean? Like kind of one that dates back to the.
Yeah. So here, let's look at
Okay.
Let's look at an example. Like so many have looked like this over the years, right? So this is Applied Materials. I was just looking at this the other day because they beat and rallied. So this base started in March of 2000, .com bubble highs, right? And it took, this is 2018. This is pre-COVID, right? So this is what I'm talking about, the false starts, right? They're sloppy. You thought it completed here in 18. No. Big drawdown. Thought it completed here again, pre-COVID. No, big drawdown, right? So that's my point. Like, they could be messy. They could be tough, right? You really have to be patient. Once it finally went on the third go, it was about $60. We're at 180 today.
Wow.
3 years later, 4 years later,
wow.
3.5 years, right? So powerful, powerful patterns. NVIDIA once looked like this, right? You got on bubble base, not the cleanest. AMD, I remember this one pre-COVID we were talking about, right?
Right.
Like this, right? So when these things happen, very, very powerful. Look at AMD since resolving higher from its base, just post-COVID, it's almost a quadruple since. Right.
Hey, take a look at MU. That one's a big one.
Hasn't even gone yet. So
hasn't even gone yet.
This one, great point, Pat. This one's super exciting, right? Another one that comes to mind. One more. It's not just tech. Here's Merck. Look at this one. We've been stalking, just in the past 2 years, right?
It's funny. I mean, we're mentioning some of the best trends out there right now because that's how they kind of start, is these massive decade-long bases.
That's right. And I remember we traded Merck right here, right? Because the thesis was simple. Zoom out, and you don't want to bet that this little, triangle here is some sort of top, right? That's got to be a continuation pattern coming out of a freakishly long-term base like this. And a lot of people were looking at this structure in Merck. You had this little breakdown just in October of last year and getting bearish on. We were looking at this and saying, that's not a top. That's going to be a continuation.
Yeah, I mean, you kind of have a head and shoulders there too. So I could see that being like a failed pattern. And I can imagine how bearish everyone got when it broke that.
So in terms of UGP, to get back to Wavy's trade, let's find out what the levels are on this one. I'm going to fib it out right here. I think that works. See, it's kind of tough to get into right now. Probably a little bit extended too. Like if we look at the weekly momentum, it's pretty extended, right? This is RSI 14 on the weekly. maybe let it settle down a bit. Wavy, I like the little polarity zone that we do have right here, right? We got some sort of like 2016 low. That was a bear market low in 2016. And then we have a little peak here right before COVID. So that's a big level too, right? And we're running right back into it. Let's call it 650. Let it
Yeah.
get to 650. Let it cool a little bit. Digest what's been, a double off of the fall lows. And then I think that's where you either want to that's where you want to define your entry, right? 650. And then you got the next fib right here around 923. But the bigger level for me, I would want 13 and change, this shelf of old highs here.
I like it. I like it. So let's move on to Dan's request. He wants to see AX, and he says a 3 to 6 month hold. Thoughts on entry?
I believe this is a regional bank.
Looks like it. Man. Oh, that's not even 2008 there. That massive waterfall.
Calling it a major bank. It can't be major. It's 3 billion. Las Vegas. Okay. Yeah, so no, it's a regional bank, but it's one of the stronger regionals, right? Most of them don't look this good. I was mixing it up with the banks last week. It's an area that I do like. We were just talking about it, Pat, right? When that Russell 2000 breaks out, we're going to be talking about things like the banks and the biotechs, and
Yeah.
expanding to these kind of left behind groups. You got a big zone right here. And I'm going to be really obnoxious and draw this real fat. And I also think, coming off of the COVID lows, at least you had a nice advance last year. Obviously, things were tough for this group of stocks, right? This was the banking crisis right here, brought it right back down to the pivot lows and held. If you look at a lot of regional banks, they blew out, made new multi-year lows. This one didn't, so I kind of like that. Let's flip it to a daily and get tactical, find some levels here. I think, this is a base. This is a continuation pattern, and you can buy the resolution of it. So earnings is behind us. That's important too.
Yep.
So draw this however you want it. It's a little coil, right? I think since this was kind of a blow off stick right here, right?
You
This
drop the VWAP?
January 31st. I don't even think you need to. I think you want to use this pivot high.
Yeah.
57. I mean, you could jump it on a trend line break here. But I think 57, this December high, Pat, you're not wrong. A VWAP works too.
Hey, what moving average do you have there?
200.
Oh, okay. Keeping it simple.
Yeah, you drop a VWAP from this big earnings stick. You can use that too, but I would rather see that range resolve. 57 above there. What's our target? We don't really have much price memory, so I would just fib out the base here and use the 161 and ignore this blow off low here. $80. 57, target 80.
I like it. I like it. And like you said, I mean, a lot stronger than most regional banks out there.
Yeah, for context, I mean, this is regional bank, right?
Yeah.
This is PRA. Absolutely blasted. This was the little regional banking crisis from last year, right? Absolutely nasty. And then if you look at Axos, this was the regional banking crisis, just brought it back down to the lower bounds of its range,
Right. Right. And we're above that. We're above the pre-crisis highs, all that. But let's move on to Shopify. I believe they reported earnings last week.
Yeah, love it. Little sell-off from earnings. So again, like we were just
3 month
discussing.
time frame, by the way.
3 months? Okay.
Yeah,
So like we were just discussing, Pat, you got downtrend, then a sideways trend, and now a new uptrend.
Yeah.
We had this base drawn like this. Long time ago now. Right? But that was really we got into this at first here. I think this was an absolute gift. Love it when you get a textbook retest like this. This was just last fall. This was the October lows. And it almost got to a double off there right before earnings. And
Wow.
I love the fundamental story here. So where do we get in if we're not already in for a trade for the next 3 months? Couldn't be any better.
Yeah.
Right? We
lining up perfectly.
Yep. We fib out this 2022 drawdown. And we're right at the 38% right here. So I think you're in. And again, this is really nice, right? Because I would ignore, from a technical standpoint, I'm looking at this chart and I'm thinking, okay, you had an earnings run up, a little bit of excitement here, and then this thing got blasted. So I would totally just ignore this kind of price action, and I would draw a thick line right here. So 82, maybe 83.50. Above there, I would buy on strength and then use the 61% as your target, and that's around 118.
I like it.
What we, again, I wouldn't overthink this, but it is here and worth mentioning. You want to see momentum get back to overbought pretty soon, right?
Right.
As it resolves higher here and starts I want to see an overbought momentum reading. I'm not going to freak out about this divergence, but I don't love it.
Yeah. So this one, Nathan has a couple here. I'll let you pick. So FET, and that's a crypto. So I'm guessing that's Fetch. Okay. Yeah, we could do that. Win, Striker, or SPG. Yeah, why don't we mix it up with the crypto? Yeah.
Simon Properties.
You know what? Caleb was just talking about this one, Fetch, right after you left Spaces.
So Fetch is a leader. I am long, been long, because it's been a leader. And look at that. So
wow.
Is this for an entry, I guess?
He didn't say.
Yeah. Listen, I like it if we're asking, where do we buy it? I think at this point, if you're not already in it, you want to, you want to define your risk at these old prior cycle highs. So let's take a look.
That's a nice chart.
Yeah, if we're using a week, we're right there, right, Pat? Like there's kind of a shelf here. So
yeah, at that point, you might as well wait for the breakout, the big break.
It's this 9 to like 107 level. Or 90 cents to $1.07. Really a massive range here. This base breakout, that's how you want to do it. You want to be buyers of this base breakout all day. And I think it's literally it's happening like right now. Crypto's a little bit of weakness past few days. This one just keeps ripping. That short-term relative strength really stands out. So I think you could almost put on a starter position here, wait for that confirmation above these, 2021 highs, maybe add the other half of your position. I think you could start scaling in right here. And then if we were to fib this one out, there you go. 161, right around 160, 60%. Probably happens really fast.
I was going to say a base that big, I would be playing for even more than that. I would be playing for maybe the 2618.
Yeah, I agree. I agree with you. So 2618 is 250. But look, real quick, why was this a great request? Why was Caleb probably talking about it? Why do I own it? This is why.
Relative strength.
It's been really hard to outperform Bitcoin, right? Like Bitcoin is the Microsoft or the Nvidia. It's the NASDAQ 100 of crypto. It's that benchmark that's just really difficult to beat, right? This one, while there's still this base that needs to shape up and complete relative to Bitcoin, not many cryptocurrencies look this good relative to the blue chip. So, yeah, it's a blue chip. Who would have thunk it?
Yeah.
And if we look back, this is a weekly. So crypto's really breath started expanding late last year, really off those Q4 lows, right? Just like the stock market. Stock market experienced some beautiful breadth expansion off the October lows, November, December of last year. So did cryptos. So look at this thing. During that period, it was steadily outperforming Bitcoin. I think this base breaks out soon too.
Oh, wow. All right. So we can finally get to the chat now. So be sure to drop them in. Let's start off with Lyft. Crazy week last week. A lot of shenanigans. Do you think there was some um, nefarious activity going on with that slip up last week?
I would guess no, but because of the after hours action, um, the SEC's got to get in there.
Yeah.
They have to make sure, right? Because if that was done intentionally and a trade was made, it should be pretty easy to find. And that would be very, very bad for whoever did that. Also, what it probably was, and a reporter, a friend of ours, Jess, reached out and asked me about it. This was an auditor's mistake, right? This was my first job out of college. So what they'll do is that 8K or that press release right before it goes out that day, it's in the audit room and they're ticking and tying it. And it's typically like a hungover 21 or 22-year-old kid doing it. And he probably just fucked up.
Yeah.
And that's, I feel for him because that could happen and that fucking sucks. And it was probably a mistake, but it was a bad mistake. And I can't imagine what went down in that audit room when this happened, because it was really bad, and there's probably going to be a class action suit and all that jazz. The bigger point about Lyft is it had 2 really good days following earnings, and now it's falling right back into the box. And this has just been such a dog for so long. And I think there's really very little exciting stuff going on about this stock. You're going to hear a lot about it. A lot of people who missed Uber are going to like get on the Lyft, train. We see this all the time, right? You missed Uber. Oh, Lyft's going to do the same thing. Yeah. These companies couldn't be any more different, right? Comparing Uber and Lyft is like comparing Meta and Snapchat.
Yep.
Oh, they do the same thing. Totally different. Uber's buying back $7 billion worth of stock. Lyft wishes its market cap was $7 billion.
I'd be interested to see how much of Uber's business is, and I'm sure we could find it out, but how much of it is Uber Eats too? Because Lyft doesn't have that, meal business.
Thank you. Uber is an ecosystem play, right? They have 3 different business lines. They want to bring you into their world, and then they're going to figure out how to monetize you, right? Similar to any of the best companies, right? Apple's an ecosystem company. Lyft is, like you said, just ride hailing. They don't have the money to invest in all this other stuff. Uber is a giant. It has equity investments in like every other ride hailing company around the world.
Yeah.
Lyft is none of those things. Uber is reducing its share count. Lyft is giving away stock comp like it's going out of style, right? Like these things couldn't be any more different. And Pat, I could tell you. So
you're saying from a management standpoint, not just like what, how is their product?
Yeah, it's part of the reason why Uber is where it is today is they have the best management team on the street. Dara Khosrowshahi is like I know Jensen Huang has overshadowed anybody else, but he's like CEO of the year last year. So freaking good. So I'm not going to give a price target for Lyft because I think that's a mistake. I think you want to get some weakness in Uber and buy that, and that's the play to make. I think Lyft maybe exists in a small way in the future, but probably not. This is probably a winner takes all space, and it's probably only a matter of time.
Only to avoid a monopoly, right?
Yeah, right.
Eventually you need to.
Seriously, it could be a situation like that, right? But this is not a race. It's not a competition at all. Like the winner has been declared a while ago, and that's what you want to stick to. You don't want to do something cute and hope for a catch-up trade. Uber, you could get those numbers on TradingView. What you would do is you would pop out the right-hand side, the panel right here on the right-hand side, go to financials, and you could get segment revenue numbers. But we want to talk about charts here. So just to drive this point home really clearly, this is the Uber Lyft ratio. Really tells you all you need to know. Pretty steadily up and to the right, really since Lyft figured it out, right? Which started happening early 2022. So as long as this trend is in place and the 200-day is steadily, sloped higher like this, and the Uber Lyft ratio, I would stay away from Lyft.
That's good advice. Good advice. Let's move on to Palo Alto Networks, PANW.
So
we get this one a lot, right?
Yeah, because this is the cyber leader. I'd probably rather own CrowdStrike, but the two of them, one of these stocks should be in every portfolio. Like this is a mega trend. AI has overshadowed everything else these days. But there are some really, really exciting mega trends taking place right now. I think online gambling, sports betting is one of them. Cybersecurity has really been one of them, but the market is really pricing that in a big way, just really since Q4 of last year. So Palo Alto would be one of those stocks that will probably get bought on any dip for that reason, just because it is an industry leader in such an exciting space. You don't want to put a trade on this here today, though. I think we have earnings after the bell.
Oh, really?
Yeah. So you want to wait and let's outline some levels that we could potentially buy this at on weakness.
By the way, I just took a peek at CrowdStrike. That one looks great.
Yeah, and I would play CrowdStrike against those prior cycle highs. It's a lot cleaner and easier to define an entry in than Palo Alto is. So here's Palo Alto, shallow drawdown, relatively speaking, in 2022. Popped out of this base May of 2023. Had a nice little consolidation here. This is really a great entry here, right? This is the last earnings report. And these guys, this is one of those companies that they just beat, raise, and rally. I think the tape is kind of warning us a bit, just over the past few sessions, that maybe some of these large cap tech reports, I'm sure they'll be good, but maybe the market reaction won't be as good as we've seen lately. I don't love the price action from semis today. NVIDIA ahead of its report. So say we do get some weakness here. I'm going to drop a VWAP from the August lows from last year. Probably not going to get that. Let's drop a VWAP from the January lows this year. That would be an excellent place. A little pullback here to 342. Great. I think you can also use pivot highs here, right? So it wouldn't shock me if and this will happen fast, right? On earnings, you might see initially a downside reaction and then it reverses. We see that kind of stuff all the time. So you got to put this one on your watch list, maybe set your alerts, because this is probably going to happen soon if and when it does. A retest here, right? Because we had this little coil in January into early February. A retest here, maybe after hours, 350. Put your orders in, grab that 350. Great. But if the reaction is positive, this is just going to be the latest coil that resolves higher. And if we fib out the base, 2022, it's not a bad place to enter, right? It's a really good place to enter. 261, right here around 355. So if the reaction's positive, and it's not like some monster move, you don't want to buy into like a 20% higher type of thing. But if you get like a mildly higher reaction, I think you could just buy strength out of this coil. You know what I mean, Pat? 3, 4,
absolutely.
Like you could get in.
I'm afraid it won't even give you the chance,
Right. If this thing rips 15, 20% on earnings, or even 10%, let it dance. And we'll talk about it next week and, re-outline some levels. But if you get like a slow start out of this coil, I think you could hop in there and then play this to 450.
I like it. And I love that little coil above resistance like that. That's great.
Totally. Like if there was not earnings this afternoon, Pat, I would say you can get this one just about right here.
Yeah. So let's move on to NU. This one's from Alex.
New bank
Alex, how you doing?
holdings. This is another one of the banks that just looks so good.
It's a bank, really.
Yeah. Don't look
I
like
never would have guessed that looking at the chart.
No.
Cayman Islands. It's not sketchy. Oh man, we got a lot of tickers to get to.
Yeah, there's really nothing here. This is such a strong stock. I think this shelf of former highs, a little bit of the shelf of old highs, pivot low from February. This is a level of interest that stands out right here over the short term, 880. Otherwise, you just want to wait it out, let it get to these 2021 highs, and then you could define your risk there at around 1187. But this not actionable here.
Yeah, no, you said it perfectly. I think it could either go right to that one and complete the base, or it checks back there first and then something like that. But let's move on to Occidental. You want to take a look at that one? Old Warren. They, I believe there was some news on that stock today. They're purchasing something or
Let's see.
mm,
They're selling something.
Explorer's sale, yeah. Western Midstream.
You know what's really cool about this? The
The news?
yeah, I'm trying to look for us. So if you put up the breaking news icon,
That's the little, yeah.
it's the lightning bolt thing. Our articles from Stock Market TV will be in here. I guess we haven't written one on Oxy.
Oh, no way.
Yeah, so you could click right through on something like, for example, Avis today. Here, we'll go back to Oxy. But if you put the breaking news icon or recent news or whatever,
Mhm.
you'll see like Stock Market Media.
Oh,
And you could
wow.
just click right through and read our technical analysis on these things.
Very
Anyway,
cool.
free plug, right?
Yeah, no, I had no idea that you could do that.
Uh, Oxy's just, we talked about this on Spaces,
Yeah.
Pat. If you want to sell puts, have at it. It's worked every time at the Buffett zone here. Right. So why is this the Buffett zone? Warren Buffett and Berkshire Hathaway, whenever this stock checks back in, high 50s, low 60s level, he's out here buying stock. Has it been a great place to buy? Not really. Has it been a great place to sell puts? Yes. Right. Because he is literally support in this stock.
Yeah.
He is
Yeah.
technical support. It's been that way for about 2 years now.
And I remember a few months ago when it was there last, it was probably November, or maybe December, October. I remember talking to you and being like, "Hey, it's there. It's there. Is he going to show up or not?" And sure enough, he did
Yep.
within a day or two.
So what will I say about this one? When you zoom out structurally, underlying trend is higher, right? So you want to earn the direction that, this really prolonged multi-year consolidation now does eventually resolve higher. Problem is, this thing's been opportunity cost for 2 years, right? So
Oh yeah,
can you trade it back to the upper bounds of its range? Maybe. It might not get there. It hasn't since November of 2022 now. What you can do is sell puts here and bet on it not breaking below, I don't know, 55, 56. Sell puts all day in this. I wish I sold puts every time it was here. In hindsight, like that was obvious, right? That would be the move. Otherwise, this is a mess. You're going to get chopped up in this range. So I think you can bet on no more downside, but betting on upside might be a tough one.
yeah, and each time it's bounced, it's kind of getting less and less height on each one.
Yeah. It's
So
not
it's been a
exciting.
tough one. Yeah.
Does it eventually resolve higher? Gun to my head, yes.
And the other thing is, Buffett, who knows what his time horizon is on this thing? He could be planning to hold this thing for long before or long after he's gone.
Dark, Pat.
Well,
All right.
let's move on. Sorry. Let's move on to let's go to coin. I know you know this one very, very well.
Nothing like price to alter sentiment, right?
Yeah, absolutely.
Just makes me sad. Nobody was requesting this one, in late January, early February, which was the optimal entry and a great time to buy this stock. We were talking all about it. 115 was that level. I'm not going to draw an inverse head and shoulders here, but some might, and that would make sense. Point remains, the reversal is in. These are the charts that we want to be buying. These are the patterns that have continued to work over and over and over and over again all cycle. This is what we think Russell 2000, Value Line, biotechs will eventually look like, right? A completed reversal. So strong breakout here back in November, big ripper, hard retest. This is a crypto
like you said, that was a gift right there. That's a gift. Yeah.
If you got in, great. It was a great trade. You should have been out here though, right? On the earnings reaction. Now we're kind of stuck in this range. So earnings, we ripped right at these late December highs. Now we're pulling back a little bit. I don't think you can see 115 again. And it probably wouldn't be great if you did.
Right. If you do, it's probably not going to hold up. Yeah.
I'd be a little worried to see 115 again. Seeing 115 here on the retest was great. right?
Yeah. Yeah.
But you don't want to see a level get tested too much, right? So if it comes back
Yeah.
again, I wouldn't love it as much. I would rather buy this on strength above 186 eventually. I think it probably takes time. I mean, this one's had a tremendous run. I don't like how we barely got overbought on what was like a 60% rally.
Wow. Over what? Like 2 weeks? Not even? One, two,
It
three.
was like 1 week, February 7th to February 16th.
And
A little more than a week.
what caused that move? Was it moving? Was that earnings or was it moving on? No, it wasn't earnings.
Oh,
Was it moving on Bitcoin?
it's a bull market, Pat.
It's a bull market. You don't need a reason.
Yeah, no, it's a good question, right? Coinbase is not going to be trending well over the long run in an environment where cryptos are not trending well, right? The more and more that it's not just Bitcoin for this one, Coinbase really wants to see breadth expansion within crypto, right? They're not like the miners or MicroStrategy that is just pure Bitcoin play. This is a crypto play. So I think that breadth expansion that we got in Q4, and then at least the leaders breaking out here in late January into February, that probably helped Coinbase a little bit. But I also just think it was technical, right?
Yeah.
Just ripped off that polarity zone. Demand came in, shot the thing higher. There's always a high short interest in this name. So moves like this are not uncommon.
Yeah. No, you're probably absolutely right. All right. You ready to move on?
Mm-hmm.
All right. Let's do Frank wants to see Hood.
Yeah. Listen,
That's been a tough one. Hey, this is kind of the opposite of coin in some ways, right?
I'm trying to warm up to this one. Why? Simply because it does look like those patterns that we keep talking about that keep working. Why do I have to try to warm myself up to it? Because it's slightly different from the other ones that we've been buying in a sense that the relative strength or leadership that we want to see is not quite there yet. But I think it's close. I'm trying not to be biased, but just like I was talking about how much I love the leadership at Uber, and also shout out Brian Armstrong, love the leadership at Coinbase too, hate the leadership at Robinhood. Terrible. So
is it still the founders that are running it?
Yeah, it's that Vlad guy, Vlad Tenev.
GameStop guy.
Yeah, he needs a haircut. So 13 and a quarter here. This is it, right? If you're interested in this one and you want to get in, this is the level to get in at. If we fib it out and look for a price target, fine. And then I'm going to show you why I'm not super excited about it and how that could change.
Let me check what short interest is.
Yeah, I mean, this one, the drawdown in this one was so gross that the 38% is not until 31. So you don't want to use that. How do we do something like this then? If the fib can't help us, easy, Pat. This will be fun. This is important. So how do we find a price target for this one? And this is just as good as using a fib level, arguably better. Measure out the base. So let's call it $7 is the lower bounds of the base right here. And let's
like it.
13 is the upper bounds. That's $6. You tax 6 on the breakout level of 13. 19 is your target.
I like it. Very old school of you.
But yeah, I mean, there's a reason why some things are old school and they stay around forever. It's because they work. So 13 and a quarter to 9 and a quarter, 9, whatever. Or I'm sorry, 19 and a quarter, 9, 19.
I'm seeing short interest is just 3.5%. I would have thought way higher.
Yeah, I would have too. Yeah, it should be higher. So, why don't I love it? What do I really want to see before I get involved in this? I want to see a breakout in the relative trend.
I mean, to me, Hood looks like every other arc itself, and then a lot of the components of arc too.
Yeah, it does. You really want this to break out though, right, Pat?
Oh yeah.
And like we're close, right? And somebody was saying to me, "Oh, it looks like it already completed." Using this resistance, it's really less about any of these former highs, and it's more about the 200-day, right?
Yeah.
Look at this flat, dead 200-day. That thing needs to start curling higher and indicating that the relative trend is up. Do
you see a scenario where this 2-year sideways could resolve lower and it just makes another leg lower?
Breaks back into the range?
No, like goes on, like, so it's kind of been basing, right?
Yeah.
You see a scenario where it just breaks down completely and just makes it a whole new leg lower?
The relative trend or the absolute trend?
The absolute.
I don't know if I wouldn't be betting on like a leg lower necessarily. If I
I
was
mean,
going to,
that would be going like very,
yeah,
that would be absolutely murderous for this, but
yeah. If I was going to short this, I would want to short this like below like these pivot lows from November, right? $8. If this breaks back into the box, it's just a don't touch, right? It just becomes
yeah.
very messy. There's the sideways 200 day. Don't love that. It's just a big mess. This is opportunity cost. For now, though, it is holding. For me, what would confirmation be? Where I'll be like, okay, I'll put on a trade in Robinhood. This relative trend needs to resolve higher. I need that 200 day pointing up. I want it to look more like, we just talked about Coinbase. You could call Coinbase a competitor in a way, but here's the 200-day moving average in Coinbase relative, right? Sloping higher. And here's the 200-day moving average in Coinbase absolute. The reversal patterns we're buying, they look like Robinhood, but you got to look a little bit harder, right? We need completed reversals. I need 200-day moving averages sloping higher. We don't have that in Robinhood. We don't have that leadership either.
Yeah. Let's get to a couple more. You able to get to a couple?
Let's do one more. Pick a good one.
Okay. Ooh, pick a good one, man. So many out there. Hmm. I was gonna say Microsoft, but that's a little too easy. What about Coop?
Yeah,
We've had a
Coupa
couple people.
software. Wait, what?
No, COOP.
Oh, Coupa software got bought out, huh? This is
Did it?
Cooper. Yeah.
Oh, okay. Mr. Cooper. I've heard of this
This
one
is
before.
specialty finance, I believe, is a lending company.
Residential loans, yeah. Hmm.
Yeah. Yep. All right.
Pretty strong trend though, huh?
Yeah, this is a lending company. Wow.
Wow. Yeah.
Any time frame? Did we get time frame?
No time frame. Nick, you got a time frame?
Because I'm gonna zoom way out on this one because that's what makes me like it.
Felly says it's a mortgage servicer.
Yeah.
Somebody said, Steve, explain a bit more about the double bottom in coin at 115 and what you would do with the current position.
Double bottom. All right.
So Nick says 3 years
Yeah,
time
good.
frame for this.
Good. That's the way, right? So sometimes, I have a couple standard time frames. I have a long-term account. I have a trading account. I will align my time frame to the chart, right? If I was going to buy something like this or one of those big, Micron, Merck, some of those big bases, goes in the retirement account. I could just, set it and forget it. Look back in a few years, right? If I'm trading some like continuation pattern out of a base or trading Coinbase or like Robinhood, that's going in the trading account, right? So this one, absolutely. For you long-term investors, it looks great. You got the 161 right here. I think this one's perfectly actionable right here. $70, price target 110. 70 is that level. And if you want to let it dance a little bit, which I would, because of your time frame, here are some levels to let it dance. All right, below 70, I think you got like 66 here at the pivot highs. And I think you could even let it dance a little bit further to these July highs from last year, which come in right around 60.50.
I like it. I was not expecting this one to be as strong as it was.
It's a nice chart. So what was the question on Coinbase? I don't see a double bottom.
Explain more about the double bottom in Coinbase at 115 and what would you do with a current position?
It's not a double bottom. The bottom was here. It's maybe a pivot low or tradable low, but just because you got like two little tests, I wouldn't really call that a double bottom. The trade has been made in this one, right? You got to get there on time. The trade was right here.
Now, if it broke those, what is it, the December highs? If it reclaimed that, would you be back in?
Yeah. Listen,
Yeah.
I'm in.
Yeah, I know you're in, but like more
stock
tactically.
position. But I had calls, right? I bought calls 115. I was out before earnings, right? Because when you get a move, this far, this fast, and you're in short,
especially if you're
calls,
long, yeah, if you're long calls too,
yeah.
the implied volatility is going to crash after earnings. So
Yeah, right. So I was like planning to hold it to and through earnings, but the move happened so fast. I paid myself before earnings. Why take that risk? So this trade for now is over. Like we said, if you get it back to 115, fine. I wouldn't like it as much as the last time we tested 115. For now, ideally, I'm buying this on strength above 186. How I'm playing this for the long term in my common, I sold a lot and I own a lot less than I did last year, right? But really, this is a really long-term play for me now, and I want those old highs, 360.
wow.
But for now, this range between the December highs and the base breakout level at 115, in between there, that'll be short-term messy.
Well, and this is why we love completed bases breaking out, because the basing process is such a headache. It's these starts and stops, and you get excited, and then you back down.
Absolutely.
So that's why when it finally does complete and it breaks out in blue sky territory, those are the best.
Blue skies and all-time highs.
Blue skies and all-time highs. I like it.
All right, everybody. That's it. That's it for us. You good, Pat?
Yep. Yeah. I'm sorry we didn't get to all the requests in the chat. We'll try to get to them. What is it, on Thursday, right? So I'll be on the charts on Thursday. Be sure to come join us, and we'll try to get to what we miss.
Awesome. All right, everybody.
Any last words?
No. Enjoy the rest of your Tuesday. This was Chart Request Live. Be sure to join us every morning right here on Stock Market TV at 8:30 for the morning show. Till then, I guess we'll see you Thursday. All right. Thanks, Pat.
Toodles. Thank you.